Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The US inflation, which came largely in line with expectations, bolstered the rate cut expectations from the market in December. But several Fed officials recently have been vocal about the uncertainties that the Fed feels in determining how much more they can ease given the structural factors keeping inflation elevated. Headline year on year CPI rose to 2.6% in October against 2.4% printed in September, but this was largely expected by the markets. What's interesting is that the dollar moves yesterday. The dollar index rose beyond 106 and it's already up 1.5% this week. Gold continued its slump, breaking the crucial 2600 mark, falling almost 1% yesterday. Interestingly, Bitcoin continued to trade at record levels, briefly testing the $93,000 mark. JK, a very interesting set of moves yesterday. It seems rate cut probabilities went higher after the inflation print, but also dollar is still rallying. What's the story you think is driving this move? Is it still the Trump-related trades?
Good morning, Swaraj. Never forget the oldest adage in the trading world: trend is your friend. And that's what is happening right now. There is no fresh dollar supportive news that came yesterday. As you said, CPA was quite well within the expectations. And no statements from the Trump administration or anything, but the dollar continues to rise because that has been the trend. And while there is no negative news also from the dollar side, there is also no positive news from other side, other countries that should keep the dollar rise in check. And so the yields are also higher in the sense that the longer term yields are higher. There is a premium that is now being attached more to the long term yields, and that's keeping the dollar bid. Another technical point is that the dollar, rather the euro dollar, broke the 9 month old support at 1.06 yesterday, and that's driving everything else also higher. And I think this trend, though it looks stretched, only based on one factor of Trump coming back to power and his policies, it doesn't have reasons for reversal, and that's why you are seeing that the dollar continues to rise not only against the currencies but also against the gold. Now, coming to CPI itself, it was well in line with the expectations. Yes, there is a bit concern that the core is higher, although as expected, and there, of course, there might have been some base effect also on the same, but deeper inside, shelter inflation is not easing as it would be desired. Now, why? Even despite the higher probability of a rate cut in December at 82% being now seen, why did the market not sell the dollar? Is because there is an uncertainty about the future rate cuts, because come January we will have all the well-known Trump policies of tariffs and immigration strict rules, all that will come into play, so that it's not going to ease. And just to highlight, even the fiscal is at a record high of 257 billion for the month of October, and these are not comforting for the market. So the dollar yields are likely to be higher, and dollar is continues to get support because of this over. Yet the Fed members obviously are also in the same boat as we are, that they don't have a clarity what's going to happen, so they are not committal on any of the future moves. While of course Powell had said that one or two really good data months or bad data months are not going to really change the pattern at this point, but that really is not how it is going to be, because the new government's policies will have a big impact And of course, the data releases from today will also throw some more light. PPI data, which is not as significant as the CPI in policy making, and also the weekly jobless claims, which will throw some light on the employment situation. These two will be important for the market to see how the dollar fares, and also how the yields move forward. We are again at slightly elevated levels than one would have seen on the dollar. Dollar yen is closing in on 156. Then yuan makes a new low against the dollar in this cycle, as well as the euro. Yeah, the Canadian dollar touched a significant milestone at 1.40. Today's unemployment report from Australia is not helping either, so Australian dollar is also under pressure. Amid all this, when we come to the rupee side, we are not seeing still much of the moves. And if anything, eventual reaction should be for some more upside for the USD INR. The report yesterday that we saw was that outward FDI also has been a significant amount of 3.7 billion in the month of October, as per the report published by RBI. So add to that the 11 billion of outflow from FII. So there's really no match in the supply and demand, which is currently being filled by RBI. And so the moment they moves out, we know how it can move much more faster. But probably that's not going to be their approach. They will probably continue to sell and keep the rupee in a controlled movement. What is also apparent is that the forwards have moved down, which means that the RBI has been intervening through forward market rather than through the spot market. So that may not have much of an implication on the headline reserves, but definitely reserves are uh, reducing now that even the foreign currency asset value of their investment should be down, with all the currency moves moving lower, and also gold also moving lower, almost like gold moving almost 10% lower if it touches 2520 from the peak of 2790. So it's a very strong globally dollar strong environment, and not seeing much to change that direction, despite feeling among at least the old timers that it's a bit overdone. But that is how it is. The markets always enters the overdone zone before any sort of pause is seen. So we will wait for any change of signal. Until then, be with the trend. Thank you.
Thank you, JK. And yes, strong trends for the dollar. Even euro broke the 9-month support at 1.06, as you mentioned, which is driving the dollar higher. The Asian currencies are also getting battered by the dollar strength. Chinese yuan at a new cycle low against the dollar. Rupee, though, we are not seeing any major fall as of now, but there may be some more depreciation given how other Asian pairs move. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.